everyone. Very glad to see you here once again. Yeah, the U.S. non-farm payrolls will be out in about 10 minutes, and me and my colleague Max are going to cover it for you today. At the current moment, the forecast stands at 200,000, and the prior figure stood at 271,000. The unemployment rate dropped to 5%. Average hourly earnings jumped 9 cents, showing a monthly gain of 0.6% and an annual increase of 2.5%. The average work week remained at 34.5 hours. The labor force participation rate reached 62.4%, though the decline in the total labor force slowed a bit. The Federal Reserve monitors the monthly number, watching for clues about the strength of job creation and inflationary pressures, particularly from wage growth. A job gain of 201K is expected with a 5% unemployment rate. Wages are expected to rise by 0.2% this time. Let's move on, and we will be able to see what do economists from different financial institutions and banks around the world think on this particular U.S. non-farm payroll release. And according to their views, we have the Bloomberg survey summary, where the median estimate stands at 200,000, average estimate stands at 200.78,000, high estimate stands at 275,000, low estimate stands at 130,000, whereas the number of estimates this time has reached 91. And talking a little bit more about the projections in particular. So yesterday at the Federal Open Market Committee, Chair Janet Yellen gave a testimony that Reuters called generally upbeat, spelling out how the economy has largely met the criteria the Fed has set for its first. After years of steady and solid job growth and declining unemployment rate, and despite the occasional scares when the monthly jobs increase has fallen toward the lower end of its range, the path seems clear. There is almost no chance for the numbers to be so bad that the Fed would be inclined to postpone the rate hike to 2016. This is according to the Saxo Group, especially now that the greenback lost some ground on the ECB's latest announcement. The jobs report will have no effect on the Fed's upcoming hike. Maybe attention is already shifting to 2016 and how quickly the Fed will raise rates. Currently, it is believed that the Fed will move very slowly after being constrained for years by the zero lower bound. The Fed does not want to find itself in a situation where new unconventional policy measures would be the only available tool. So investor focus might begin to shift from the payrolls to wages and the labor force participation rate. Hourly compensation for non-farm workers in the third quarter rose 3.4% from a year ago, and the October report showed a 2.5% increase in average hourly earnings from a year ago. The participation rate mentioned previously, the 62.4%, is actually at post-crisis lows, while the employment to population ratio has increased only marginally since the financial crisis. There simply isn't much threat of inflation, and greenback bulls and stock market bears might be in for a disappointment, as the Fed is increasingly seen to move at snail's pace in 2016. Once again, this is a comment from Saxo Group, and I have only 1 minute left for the Dukascopy community member sentiment poll. And as you can see, traders were slightly bullish, I would say, this time, 52.88% versus 47.12% bearish. And we have traditionally a couple of comments. So Awakis says that the dollar regained strength after the Fed strongly indicated to Congress on Thursday that policymakers are likely to vote to raise interest rates at its meeting in 2 weeks, bearing any major shocks for the global economy. And hope that you can read fast because I won't be able to definitely quote it. The bearish comment, and I would love to invite Max on the whiteboard to cover the technicals.
Thank you very much, Polina. Hello, everyone, once again. So, yes, today, just in some 5 minutes from now, we have just a bunch of data coming out from the US. We have the, as Polina has just said, we have the US non-farm employment change, the unemployment rate, the wages data, so it's all important, and it's quite likely to move the markets quite significantly, hopefully, especially if we have some surprises in the data. Since the expectation is actually quite positive, particularly for the payrolls data, which is expected to increase by 200,000 in November, and will drive probably the most the decision of the Fed to raise or not to raise the interest rates in December. So it's a pretty healthy increase projected, and therefore we have a positive trading strategy today, and the euro-dollar currency pair for discussion. So it's actually quite hard to comment probably on this currency pair very much, first of all, because of yesterday's move of the euro strongly to the upside. Now it's trading above 109, which is a bit strange because just 2 days ago it was trading around 105. But still, after such a sharp move, the sentiment on the euro is strongly negative with respect to the dollar all across the board. As you can see, our sentiment is negative in 55% of all the cases, and also other sentiment is also negative at ONE, the Daily Forex and Saxa Group market participants. They are also going short on the euro now versus the greenback, and depending orders are also set to sell the common European currency against the US dollar. Speaking about the possible market reactions after the data is released in around 2.5 minutes from now, we can possibly think about 3 scenarios. The first scenario is showing that the currency pair will not move in case we have the data pretty much in line with expectations, or we have the payrolls in the range in the range between, let's say, 185,000 to 215,000, which will be broadly in line with expectations. At the same time, if we see a positive surprise to the upside for the second consecutive month, as we have seen it in October, we can also see the euro declining quite sharply against the dollar, so the dollar is going to appreciate, and the first take profit level is placed at 108.73 at the moment, which is the 4-hour S1 at the moment. And in case we see the worse than expected data, possibly below 185 or even below 180, which is considered already as a quite dangerous number for the Fed, we also can see the euro to continue appreciating against the dollar and to prolong its winning streak, possibly to the 109.40 level, which is the 4-hour pivot point at the moment. Okay, I guess I just have some 1 minute left until we will see the numbers on the US employment, wages, and unemployment for November of this year. I will just mention the technical indicators on the euro dollar, and on the 30-minute time frame, they support the bearish scenario. They are negative, slightly negative at the moment, but still we are just paying attention to the expectations and to the sentiment on the euro dollar, but it will all of course depend on the exact numbers, which are very likely to drive the Fed's expectations and Fed policy further. So we already see actually an increase in the euro value against the dollar, but we are still waiting for the data. The currency pair is very volatile, actually, for the moment. And yes, an initial reaction is actually negative because we see that actually the US employers created 211,000 jobs in November, which was ahead of expectations. It's of course down from 271 we have seen in October, that unusually high number. Concerning the unemployment rate, it's unchanged. And speaking about the wages, they have also matched the expectations. And by the way, the prior number for October was revised upwards to even 298,000, which is a very positive number indeed. And the November data also exceeded expectations, which is a very positive sign for the Fed and for the US. So now let's watch the Fed funds rate probability. Is it going to increase further from the current, I guess, 76% probability that they will hike in December? Yes, and of course, the first reaction is positive, even though initially the euro decided to spike to the upside, but the overall reaction was very positive for the dollar, and basically the first take profit was touched around 108.73.70 level, and now we see the euro bouncing back slightly to the upside. Okay, I guess that will be all from my side on the technical part today. Thank you very much for listening. I wish you all a great weekend ahead. See you all on Monday. And I give the floor back to you, Polina, just to wrap it all up.
Okay, thank you very much, Max. Yeah, the numbers came at, once again, 211,000. And that's pretty much it that we can say for today. Definitely looking forward on the Fed decision. Is it going to be next week? No, in a week, right? In a week. Yeah, meanwhile, guys, you're very welcome to join community member .NET webinar on Algo Wars. You can see his charts already on the whiteboard, and that's pretty much it for today from the Dukascopy Research Team. Hope it was useful for some of you. Good luck and grand tips, sorry, to all of you guys out there. Have a great weekend, and Doc, you're on air.